This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. I really love this story today, this interview today. I randomly was connected with my guest, John Lin. I did not know of John, had not heard of John, but I knew his trading style was high frequency. I knew his trading style was in the millionths of a second. Now, this is past my pay grade. I don't know anything about this. Wrapping my arms around this, very difficult. But, and as you will see in our conversation, there was a piece of common ground. Roughly, John and I are the same age, and he got started on the Chicago trading floors, then migrated to Singapore, and then was right there in the catbird seat to watch Barings Bank unfold up close and personal. Now, all these years later, John runs, as I mentioned, a successful high-frequency trading shop called Grasshopper out of Singapore. Again, my podcast will go to the different. It will go to the outside the box. I enjoy that. Yes, my trading perspective might come from an entirely different place than John's. But, and I think you'll see, the commonalities, the way to think about entrepreneurial success. John brings that to us all in a way that we can learn from. I hope you enjoy this conversation with John Lin. In thinking about our conversation today, you make me go back to the first moments that I started to investigate as a political science major with an MBA, getting out in 1994, wanting to get onto Wall Street. The first book I read, I think, was Liar's Poker. So now 1994, though, was interesting because it's kind of, it was like the bond market massacre. Nobody was hiring. But it's kind of interesting because it's not 1990. So, Chicago was completely changing at that point in time. The electronic markets are about to hit full force, if not already. I remember, okay, gosh, I want to get involved in this world. I got to take the Series 3. I take the Series 3. And then I start to wrap my arms around things and I start to kind of go down this track of understanding position traders and some of the traders that I've written about, some of the traders that you know too. But in speaking with you, you kind of remind me and unlock a world that I think sometimes confuses people when they hear the word trading. Because there's trading, there's market making, there's higher speed trading. And you take this early floor experience, and I'm gonna let you run with this. You take this early floor experience in Chicago and it really kind of shapes your life. But I'm kind of right though. Once I got to the mid 1990s, the experience that you were having starting in the early 1990s, that game was over.
Yep, that's correct.
I mean, it was a completely different ballgame. You were kind of like the last of the Mohicans in terms of like getting that floor experience, weren't you?
Yeah, and what a pleasure it was. I mean, I learned so much fundamental trading knowledge just by having it passed to me. I mean, literally from person to person. So you would take on a friend or someone you knew in the pit. You would ask them why this was the case or how they decided to sell there. And that's largely absent now, right? It's a huge gap in passing along trading wisdom that I really miss. And when we started trading electronically in 2006, I actually ended up in Singapore after going from Chicago, from the CME to the Board of Trade to the Life. I traded there for a little bit, and then Japan, and then I ended up in Singapore. So I was able to eke out actually almost another 10 years, all the way until 2005 trading in the pit. But yeah, we saw the writing on the wall right around the mid 90s into the late 90s. If you made it past 2000, it was almost like, how did you make it so far? But that was the benefit of me being in Asia.
Let me keep you at one place for a moment initially, because I think it's my own curiosity, and I think some of the audience. I mentioned being on the floor and you got off the floor traders, position traders. They're basically calling into the floor to make their trades. But, we're all using this word trading. and they're different. I mean, they're the same, but they're different. Why don't you kind of give people a big, broad overview that when you hit the floor, what you saw from clerk to trader, what that experience was, and kind of explain market making to people?
Well, when I hit the floor, I had just graduated from Cornell University. I had a degree in engineering, but I had completely shrugged off going down that route, and I ended up being a runner on the floor of the Chicago Mercantile Exchange. So you spend about 3 to 6 months there having zero idea of what's going on. It is just this massive melee and cacophony of noise and chaos. And then you slowly start to figure it out, who you're supposed to go to, how do you check a trade, what do the hand signals mean? And then you realize that the independent guys, or the locals, quote unquote locals, those are the guys that are just jobbing or trading for their own account, are largely in the middle. And then the brokers are on the top step. And outside of the brokers, which are often color coded by jackets, would be a ring of clerks that are servicing clients on the outside ring who would phone in orders taken by the clerk or armed to the clerk with hand signals executed by the broker. That broker would turn into the pit, hit people around him, other brokers, traders, locals, whoever it was, anyone who was interested, and then they would feed that back out to the phone clerk, who would then go to the customer. That was the whole path. But within this cast of characters were so many different kinds of players. You had different pits that might have been linked. For instance, I started in the Eurodollars. So there was a Eurodollar option pit that was getting a ton of action, and all of those guys had to hedge into the Eurodollars. So you started to feel this great relationship. Not very far away was the IMM section of the CME. At that point, traded Deutschmark, Canadian dollar, Swiss franc, Japanese yen. And then you started to kind of understand that although over there they're trading currencies, currencies are often linked to interest rates. So then as the currencies move, the Eurodollars move. And then, you realize that Eurodollars are a short-term interest rate, often linked to a long-term interest rate. So then you have bonds. So after a while, maybe 6 months to a year, you start to feel these correlations or anti-correlations between markets. And you just start to get instinct and feel. That actually really takes a long time. And then you add on the difficulty of having, eventually, if you have a badge, to step into a pit, decide what to buy and sell, not be intimidated by everyone, and hopefully be able to have the discipline, the process, the risk management to go and make some money. So it was really quite a daunting task.
Let me take you back, though, even a little bit, because that's kind of gives the full kind of picture. But here you just say, okay, I'm a guy from Cornell. I've got an engineering degree. I believe, and I think we spoke about this when we met, Taiwanese background. That doesn't seem like the typical guy down on the floor characteristics, is it? Or the persona. So how did you make the first step to get there? I mean, Chicago is a pretty parochial place. It's not like they're just letting everyone in, were they? I mean, what was your strategy? How did you break in to even get the first foot in the door?
I probably applied to a dozen or 2 dozen firms. I pounded the pavement. I went about it in a very simple way. I farmed out to my network who knew anyone, whether in New York or Chicago. Eventually, I decided just to go to Chicago because I knew, even while I was in university, I knew this is what I wanted to do. I had a brother who was a trader. I had an uncle who was a trader. So I understood that enough that I realized, hey, this is something.
Were they floor guys?
My brother worked on the floor for a short while. Yeah.
Okay, so you had some inspiration, and then it was like, okay, I'm going to do that too.
That is correct, actually. I was very, very determined to give this a real shot because the floor, what it represented to me was sort of this bastion of capitalism and freedom and independence and merit and honor and these things that actually are really important to me. I play a lot of sports, so these are things that's I want to be judged on what I do, not how I look, not who I am, not how much money I have, not what the clothes I wear. So it was important to me to be able to go down there, and I wouldn't say that I was trying to prove myself, but I was very determined this was going to be my career, or at least I would give it a great go.
This was capitalism ground zero, so to speak.
Yeah, in a way, I was motivated to go in there and succeed. Although to me, success was not necessarily about money, but of course, I was actually 20 years old at that time, or 21 by the time I got my badge. I was keeping a scorecard based on P&L, but it wasn't necessarily the most important thing to me.
Now, I got to ask, before we kind of bring things up to a little more current, just to go through your background, is there an experience? Is there a player? Is there an anecdote? Is there something that happened during that floor experience, either early on or farther along the experience? And one hint, not bring up bearings yet. But is there something in the early stages that you saw that you really kind of just changed you?
Well, I think about 3 months in, I was a yellow jacket or a clerk, and I had been sent up into the back month Eurodollar. So I was standing at the highest peak of the back month Eurodollar, kind of the highest peak of the whole floor of the Chicago Mercantile Exchange, which is really gigantic.
Huge.
At that time, yeah. And I was learning, I'm a reasonably fast learner, and I kind of had it. And the guy who was training me just turned to me and said, look, I'm going to go have a smoke for 10 minutes. There's nothing going on. We're after 8:30. There's no Fed announcements. You'll be cool. Don't worry about it. So I was standing back there myself, and I can't remember exactly what happened. It was some kind of Fed talk, but the Eurodollars just started going crazy. And the Eurodollar options started getting hit really, really big. I could tell because this is about 100 feet away, and I saw the commotion in the Eurodollar options. And then I saw my traders. We were all wearing teal and blue jackets. They were literally pushing people out of the way, getting to the front of the Eurodollar futures pit, which is still about 80 feet away from me, and signaling to me sell orders in the back month. And these were not small sell orders. I might have been used to taking 50 or 100 lot and working the bid or working the offer, but it was like 800 at the market, boom, 500 at the market, boom, 777 at the market. And it was like, boom, 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 boom. Oh man, I did my best, and I tried to grab the broker. Of course, everyone was busy. The market was coming off 1 tick, 2 tick, 5 ticks. It was the back month Eurodollars in 1991, not that liquid. So I grabbed the broker who did not work for my company, but he was our broker. I gave him the total order, whatever, 3,257 at the market in red June. I remember he looked up at me, at some 20-year-old kid, and he was just basically like, go fuck yourself. He was just like, get off of my face. And at that moment, you have to think about what you're going to do. You have 5 or 6 people 80 feet away from you that are completely dependent on you getting something done. You have a guy right next to you. He is basically ignoring me. And what are you going to do? And the market is going crazy.
Put into context the economics here. This is not small dollars.
That was $25 a tick, right? So for every 1,000 lots, and I had at least 3,000 lots to do, it was 25,000. So it's 75,000 minimum. And we were moving probably 5 to 10 ticks. So, we're talking $500,000 to $1 million on getting the hedge off. Man, I can tell you, I felt my heart pumping. I grabbed the guy. I was like, this is the amount I need. Get it done. He started banging them out. He looked at me with disgust, but literally he turned around. He's like, Red June, what's here? Boom, 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 boom. I knew that wasn't the right way to bang it out. But at the same time, I needed a fill. Meanwhile, 80 feet away from me, everyone is frantically waving. And then the last guy to come into that group was my boss, who happened to be a legend on the floor at that time. And when I started getting the fills back, my boss was actually the last guy to give me the order. So the fills were sequentially like, all right, I got 500 at 7, 300 at 6, 500 more at 4, blah, 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 blah. And it's going all the way down, and the ticks are going down. And I fill my boss on the lower half of it as best as I could. Literally, this happened probably within 2 minutes. And I saw his head just go beet red. And he's not a tall guy, maybe 5'6", 5'7". He just disappears. 3 seconds later, I see everyone down this long aisle that connected the Eurodollar and the back month Eurodollar pit. I see people just getting knocked out of the way. And 5 seconds after that, he is in my face as I'm standing up in this tower and just yelling at me in a way that just let your imagination go crazy. He was in my face. I just remember going, oh, Jesus, how did I get in this mess? But you know what? Eventually, I filled the order. I got everything back. I dispensed it. 5 minutes later, the guy who on a smoke break came back. The markets had kind of calmed down by then. He's like, "What happened? What happened? What happened?" I spent the rest of the day traumatized. And I remember there was the clerk standing next to me named Joey Bag of Donuts in Chicago, right? And he turned to me. He didn't miss a beat. He just turned to me and he's like, "Oh, dude, I've never seen anyone yelled at like that." And then he just turned around and just kept on doing his stuff. I was traumatized, but I really learned some amazing lessons about trading and how intense it actually is. And at that time, I was still a clerk. I so appreciated how hard it was after that day. I thought I was going to get fired. In the end, I didn't get fired. About 6 months later, I ended up getting my badge and going into the pits. But that was a transformative moment.
You probably didn't get fired because you were now more valuable that you had that experience.
Right. These are the things that now fast forward to current time. I don't know if people really are able to get this experience that much. Things move too fast. No one explains them. It's just a lot less understanding about how markets work, I feel.
Let's stay there for a moment. I'm probably going to take you back in time to something that I mentioned earlier and kind of hinted at that I didn't want to go there just yet. But given that you just brought that up to current, I think it's a good jumping off point, which is you have this interesting human experience in the markets, something that doesn't exist anymore. It's gone. It's done. It's lore. It's something that young people today, the 25-year-old guy today, is never going to have your exact experience. But he's still going to have to trade. He's still going to have to make moves and play the game. How will that person look at things differently? I mean, will it really affect them? Or is your experience very, very valid for the times that you went through in your life, but today, the young person today isn't going to have that experience, so they burdened by not having it? I mean, they don't have a choice, really. You see where I'm trying to go here? It's kind of, you got this interesting thing where you've got this experience that a certain group of people can't share because they only lived it, and no one else is going to have it again.
Right. I totally understand where you're going with this. And this took maybe a decade for me to have the maturity to see that experience that you and I are both talking about right now, the pit experience, the pit instinct. It took me a long time to realize that it wasn't just the pit that this discipline and instinct was valid for. As I matured as a trader, I sort of realized that discipline, that outlook was actually quite valid in life. Look, I can't say that I live my life exactly as a trader, right? There are things that are not perfectly transposed on a risk reward, chart. But I think it's actually very, very helpful. So as I matured in the 90s into, all the way to the end of my pit trading career, and then when I started Grasshopper, the quantitative high frequency firm, I realized that a lot of the lessons of trading are actually everywhere. But a lot of people don't see it because the pressure of needing to perform isn't quite the same thing. Let's say in sports. In sports, you always feel that it's your fault, you didn't train hard enough, it's luck or whatever it is. But in the markets, as a trader, we are taught to succumb to the market. We are taught that we're never bigger than the market. You can have an opinion and you can try to fight it, thinking that the market might eventually go your way. But as a good disciplined trader, we're not trying to overcome the market.
You're just listening.
That's right. We're just listening. It's a good ethos to have in multiple situations. I started learning those lessons in a context that was not just the pit. And that was very helpful to my life.
Let me take you to something personal that we've not talked about this, but I'm curious. I believe black belt in Taekwondo. Is that true?
Yeah.
What age did you start?
I started actually at the Chicago Mercantile Exchange, and then I took maybe a 15-year break. I had kids. I wanted to do something with them. So we all, we went through the whole thing. We did a lot of martial arts and took Taekwondo to the end. And it was something important to me to establish a level of tradition, discipline, focus in my kids. So that's why I did that to the end. And of course, again, as I said, I like sports.
That's kind of late starting, I guess, in your 20s. What was your sports background, though, coming into that, though? I mean, because look, I'm not practicing any martial arts. So when someone says they've reached black belt status, I have respect for that, even though I don't know the full enchilada of all the steps it takes to get there. But I do know that's high level. So what was the motivation? What was the drive that was pushing you? What was the background that enabled you to get to there?
My background was I played baseball. I was a pretty decent swimmer. I played varsity water polo in high school and college. Around 30, I started playing ultimate, and then I played competitively for maybe 12 years. So I really like being on a field or a pool or whatever, or just competing. Earlier, you were talking about how does a person get the experience of how to fight adversity or the market, or let's not say fight the market, but just to understand the process and the game. I get a lot of that out of sports. Considering that I spent from 1990 to 2005 as an independent trader, and then I built a company from 2006 till now, actually, one of the most important skills I learned on the field was leadership, negotiation, getting along with people, motivating people, all these things became core to who I am. And I learned that on the field. It was a great benefit to me. And I wanted my children to benefit from that too. That's why I had them go along that path.
As somebody who is later in life started to appreciate the notion of flexibility and discipline in a yoga practice, I do look back now in time and I say it is something that I think as Americans, I wish we were exposed more to those types of traditions because I grew up playing baseball too. I loved it, but there's something different about some of the Eastern physical endeavors I really enjoy. Hey, before I keep going off on a tangent though, I have to take you back to something that I mentioned. I've kind of tried to avoid it for a moment, but I want to take you back to Barings, 1995, because ultimately Barings is something for me figuring out. Now here I had no connection to the floor. You had a major connection to the floor. You were next to the guy who was bringing down Barings. I'm going to let you tell that story in a second. But for me, I got to look at it from a distance in early 1995 to say, wow, look at all that negative performance. Look at that guy on the front cover of Time, Nick Leeson, and handcuffs. And then here I am at all these different events, meeting all these traders, and I'm looking at this fantastic performance for one trader in particular who happens to own the Boston Red Sox now. And I remember kind of putting two and two together and thinking, and kind of some weird happen chance overhearing things and whatnot. And I kind of realized that from a big picture perspective, the position trading perspective, off the floor perspective, I was like, okay, here's Nick Leeson, here's John W. Henry. I was like, oh my gosh, this is so fascinating. This kind of woke me up to what was going on, so to speak, in the game. But the exact same kind of time that I'm having my little epiphany, you're actually in the middle of history, so to speak. You are next to the guy who is bringing down Barings. Why don't I let you lay a picture on how you got to Singapore, made it to the exchange floor, and maybe kind of just lay out the scenario, how you ended up during that particular time period?
Yeah, I had front row seats to that one. When I got to Singapore, it was late 1993. And I had been in London. I was a decent trader in Chicago. I was kind of used to being able to scrape out some decent money. I was a spreader. I had a good ratio of winning to losing trades, but I wasn't that significant. And I was still really on the upslope of learning what it meant to be a trader. But my core competence was there. When I got to Singapore, so it was a bit of a different pit system. They're much more individualistic, much more backfighting in that system. And around the same time that I got there, Nick Leeson actually arrived in Singapore too. First, I would say this: Nick was actually a pretty decent guy. He was British. He was young. I think that he was the compliance manager or back office manager for Barings in Indonesia first. Then he ended up in Singapore, and he was a hard worker, got along with a lot of people, quite charismatic guy, actually. But he was sort of the high water mark in what a trader could be. So over 93 and 94, he went from running the back office to also being the floor manager. Being the floor manager meant that he had a lot of latitude in how they filled orders. And Barings Tokyo at that time was very big. So Nick had a lot of say in, he might get an order, I need to buy 500 Nikkei. Nick would work it. And he would actually get pretty amazing fills because he very quickly, as sort of salt of the earth, British guy who understood the street and how people think, he was able to bully the market. And he started soon to be able to nudge the market up when he needed to sell, and then knock the market down when he needed to buy. And he started to generate this is where it starts getting interesting. He started to generate this reputation as a guy who could do no wrong. I remember this because I was occasionally going to Japan, and we cleared Barings. So we actually had a desk in the Barings office, and we could see from the Japanese side how much they put Nick on a pedestal more and more and more. So that became pretty interesting. And then SGX, or at that time it was called Cymex, he became almost a legend on the floor within a year. His band of guys, they wore these blue and yellow striped jackets. His band of brokers can march into any pit and just start knocking it around. And after 6 months to a year, people just realize, I'm better off getting out of this guy's way. So you had this reputation, you had this groupthink, you had this wave of momentum that was behind Nick, that going well into the Barings crisis, it was like this guy could do no wrong. Massive lesson in group mentality. Ridiculous. So normally when I tell this story, I kind of accelerate. Nick was basically defending the Nikkei, and then what happened is that there was a Japanese earthquake, stocks went down. Then they realized the infrastructure damage done to Japan was far greater than everyone had thought, so stocks went down again. Nick was trying to support the Nikkei futures. There's all kinds of stories. Some people say it started with an 88888 error count, and that was true enough. There was definitely an error count, and then that kind of became sort of this slush account because he was controlling the back office as well as the floor. And then, boom, he fell into the trap. Remember, no one knew this at the time. No one knew what was happening at the time. But the trap that he fell in is he had gotten out, squeaked out of so many precarious situations so many times that when the earthquake came, he went all in on it. And maybe a $500,000 loss became a $5 million loss, became a $50 million loss, et cetera, et cetera, et cetera. That was his big mistake, but we didn't know that at the time. So for probably a week or 2 weeks, I would have to look it up, after the earthquake, he was still in there defending. He would then end up financing that long Nikkei position by selling Nikkei options. But then volatility was exploding, so he got hurt there. Then he started walking into the JGB pit. This is where I met my last interaction with Nick, was in the JGB pit, where I was actually a JGB options market maker. And he kept coming in. There's only two options market makers, me and another kid. We were just the young guys kind of doing our time. And he would come in, he's like, I need a quote for 1,000 straddles in the JGBs. That's a ridiculous amount of size. And you can imagine two, 23, 24-year-old kids looking at you going, what? Well, what do we do with that? It ended up, he did not sell JGB options to us, but he went into the JGB's futures pit and started muscling that around. At one point, I think it was the Thursday before the weekend where he absconded and tried to end up in Germany, he went into the JGBs and just started pummeling it. At every level, he had 1,000 to sell, 1,000 to sell, 1,000 to sell. To which point, everyone was just looking around going, Jesus, how many does this guy have? At that point, the closest story to legitimacy was that Nick had a massive Swiss pension fund, and these guys are in, and they're going to, remember, by reputation, this guy could do no wrong. I think some people are already on the scent. Maybe John Henry was already on the scent. I think they had 25% of the open interest in the Nikkei at the time. Something was amiss, but we were so close to the forest that a lot of floor traders didn't have any idea. So, that's a lesson also there. So be able to step back and see what is going on. But anyway, he went into the pit so many times and started hammering the JGBs. At one point, I got off. I was sitting outside in the pit. I was like, God damn, how can this guy keep doing that? How can this guy be so good? So I myself, let me just take a step for a second. I myself was at this period in my trading where I was looking at a guy like Nick, same age as me, got to Singapore at the same time. And this guy was tossing around so many millions of contracts. He was so respected. He could do no wrong. And I was looking at what then I perceived as bravery and courage and acumen. And I just remember thinking that all the discipline I had talked to you about in the first 10 minutes, I made a conscious decision to just say, fuck it. I'm just going to go with what Nick goes. I mean, some traders just like to go with the smart money. All right, fine. But I remember that I did it almost recklessly. And I was like, God damn it, John. I mean, how are you going to walk in there and just do what someone else does just because they're doing it? But I did it. I walked in, I sold the 10 lot in the JGBs. It immediately was 5 ticks against me, 10 ticks against me. I think I was out eventually 10 or 15 grand on the situation. I puked the position, walked back out of the pit, and I was like, God damn it, what the fuck are you doing? I was just beating myself up. Nick stepped out of the pit. I turned to Nick and I was like, Jesus Christ, Nick, what is going on there? And he looked at my shoes. And I mean, we were acquaintances. I like Nick. I don't have any problem with him. He looked at my shoes and he's like, John, you got laces. I'm going to have to borrow those. I'm going to go to the bathroom and hang myself. And that was the last I ever saw him. I remember my impression when I heard that. I was like, shit, you put someone on a pedestal. By social validation, other people see him on a pedestal. And I just bit into that story. I just became guilty of herd mentality and groupthink for not any particular good reason. And that to me was actually one of my main low points in trading. And as sad as that was that time, because actually what happened is that when Barings was pulled off the floor, all of their customers were pulled off the floor too. So in that 1 or 2 months in the aftermath, which probably was the best trading of that year, or if not 2 years, I wasn't even on the floor. Everyone got yanked off the floor and investigated. It was such an unfortunate situation, but it was such a learning point for me to go out and really be galvanized in my independence of thought. It doesn't mean that I can't seek other opinions. It just means I have to make up my own mind. And that was a massive lesson for me in life, in trading, everything.
Let me ask something before I kind of move you up to current, some of these great early experiences. But you brought something up about Nick in the respected part and the British part. So having spent a little bit of time in Asia, I can appreciate that when I go to Hong Kong, you feel the influence much more than, for example, I think, than Singapore today. But did that experience for Singapore in particular, and I'm not trying to pick on any nation or whatnot. I mean, everybody that's got a history book or a Wikipedia entry can find out the history of the world, and that's they can go figure that out. But after that situation with Nick, so much respect afforded this British guy. Did things change? Did that respect thing change to where you could perhaps get the free pass, so to speak, because you were the respected British guy at the respected Queen's Bank? Did that change in Singapore after? Now, I say this because today, in 2018, if I think about my Singaporean friends, when I go to Singapore, I don't perceive a country or a people that are, I feel very fair, very entrepreneurial, very capitalistic, but I don't perceive any lack of confidence or ambition or that I'm Singaporean and I'm number two. I don't feel anything like that. I like the, hey, we're Singaporean, we're pretty damn good at what we do. Boom. Did that situation with Nick, was that a changing point for respect? I'm not trying to be controversial.
I totally understand. I would say that the luster of being an expatriate definitely took a knockdown after that, but not that big. People tend to forget things very quickly. But I will tell you what I saw in Singapore, and I greatly admire how Singapore treated the whole situation. Singapore it's a democracy, but it's very led by the top. So when they investigated the situation, I actually thought they were extremely diligent about how to go about it. They took a long time. They found out as much information as they could. And I'm saying this as a person who's gone through two lawsuits in Singapore. They take great pains to understand. And they take great pains to have their legal process as a business entrepreneur of the world. They want their legal process to be fast, efficient, and transparent. Of course, in Southeast Asia, there are many people who will be like, well, there's a lot of parts of the legal situation that I don't like. But I thought that they did a really good job with this. Now, carrying forward, I see how Singapore, they're very purposeful in what they choose. They actually like being second, if you ask me. They do not want to be a bleeding edge early adapter. They want to be nimble enough and ready enough that when it's time to be number two or maybe number three, they can pivot and change very fast. I think actually they have that game down now, and I'm sure that the Barings situation was a big proving ground for them. Just like the story I told you earlier when I was in the back month Eurodollar was sort of a testing moment for me. I'll tell you a funny little anecdote. One of the main investigators into Barings was a very high-ranking lawyer who eventually became a minister. And before he became a minister, another situation happened where I was in a lawsuit with my employer at that time. I was independent, but I was backed by a company. The lawyer that we engaged was the lawyer that was the head investigator of Barings. So that whole thing came all the way back where we went to this guy. We had no idea that he would ever take our case. It was actually a favor that a friend of ours had set up. And he saw it. He recognized what was going on. He recognized my ex-boss, and he was like, you know what? I'll take this case. It was just this weird cycle of karma. I learned the lesson, you know what? Live your life in a worthy way all the time. You never know when something's going to come back. And that really came back favorably for us. That guy ended up winning our lawsuit. And yeah, I was very thankful for that.
So, I've kind of dug around your early history here and early parts of your life. So now let me give the audience the shift. So the shift is now in 2018 running a company called Grasshopper, which you mentioned earlier. I love the connection to David Carradine and Kung Fu. And we had a fun chat about that I referred to a friend, like Patience Grasshopper. But going ahead and jumping people to the point where they can see the connective tissue of all these early great experiences you have. And here you are now running a high frequency trading shop, trading basically at light speed, okay? Things that, not only can you not necessarily describe to us for proprietary reasons, it'd probably just be difficult in general because ultimately the speed and the algorithms and whatnot at that fraction of a second, it's a little mind-boggling to some degree. So here you are, you've set this up. You are now also heavily working through the notion of market making in the crypto space. So connect these dots for people, the jumping off point to where you could take these early experiences on the floor ends. So you might want to jump off here. The floor ends. That had to have been a big change for you. The floor ends, and now you're an off the floor guy, but you still want to kind of trade like a floor guy. And with technology, of course, now you want to trade like a floor guy, but you want to trade like the superhero Flash.
Well, it didn't start out that way. And I think this is what was good about the training that I had, which was really how to recognize edge, how to seek edge and recognize edge. That means that you have to have your head on a swivel. So what actually happened is that in the middle of 2005, they had closed all the pits in Cymex, and they had started, for over a year, they had started migration. And even at that time, during that transitional period, I had a microphone and a headset. So I was hitting off floor as well as standing in the pit, and I was kind of adapting that way. I had decided to take 6 months off and just see how the chips fell. And then early in 2006, I went back, I got a seat at an arcade. I mean, really low tech stuff. And I just started looking at markets. I was looking at the Bloom Bubble Schatz, which was a big trade at the time, other European contracts, as well as all the stuff that I had traded before. I probably had about 2 or 3 months where it was just, I was like, man, I just don't get this. I don't get this. I mean, it reminds you of how I started my floor days. Like literally, you just have to go up this long learning curve. And then I started getting some traction. Maybe I found some rolls. Maybe I found some closing auctions. And I started to realize, hey, look, there's edge here. Once I realized that there was edge, that there was some promise of opportunity, I started learning.
What time frame were you initially saying to yourself, there's edge?
In seconds, sub-seconds, but enough that you can, at that stage of electronic trading, enough that you felt like you can leg into something or arbitrage into something or trade a spread, or these were slightly slower moving stuff. At that time, if you were sub-second, it was probably okay. So we were working on trading systems that were more or less the blink of an eye.
This is 2006.
Yeah.
Okay, I got to get you to connect the dots for me. You leave the floor. You're not at sub-second on the floor. I mean, you're human beings. So you leave the floor. What was the trigger? How did you start to go down the path that you could even start to understand that this blink of the eye would be an opportunity for you? I mean, there had to have been some trigger, or it's just going down the curiosity path and you kept just upping the ante in terms of where you want it to be in terms of time frame.
So you have to imagine, I've been trading for almost 15 years, and then suddenly you take me out of my comfortable environment and you plot me in front of 2 or 3 giant screens with multiple boards. You have to figure out where this sound is coming from, or what the ticker is, or how you access the market depth. It was just a hell of a lot of learning. And that was the other big thing. Once you identify edge, then you have to learn about how to dig better. So then it became, a decades long learning curve of what is latency? How do these servers work? Where is the logic? How does an exchange throttle you? How do packets of market data get truncated and moved around? All these things I had to learn. The triggering moment was maybe you come out and you're like, oh, look, I'm up $500, and this is how I did that trade. Or maybe it was $3,000 and then $5,000, and then you're like, oh, look, now we're into a roll, and maybe you get some traction there, and that might be a $10,000 bump, and then the roll finishes, and they're like, well, what am I going to do now? And then all of those disciplines that you had before, I'm going to trade the open. Once the open peters out, I'm going to stop trading. Then I'm going to look and see if volume comes back, maybe around 1 o'clock, maybe around 1:30, maybe into the 2 o'clock close. And then you start to pick your points selectively. But in the background of all that, you're learning all about the technology that went with this. And keep in mind, at least in Singapore, all of us that were trading had not been trading in this format for more than 1 to 3 years, let's say. So there wasn't much of a head start. I remember in 2006 when I was determined, I was like, you know what, this technology sucks. We're going to have to start writing our own code or telling this program to do exactly how we want. I want to buy this and sell that one. I want to do it in a ratio of 2 to 3 or whatever it is. And I went around and I was asking, maybe the people that I knew in the room with some integrity. And I was like, listen, why don't we bind together and do something? Take our costs down, invest in technology, hire some people, and let's just see where it goes. Nobody took me up in that offer. Nobody. I hired one guy who was actually a sports teammate of mine. He's now my CTO. And then we hired another guy who actually worked at the desk there. And then we just kept hiring and got to around a dozen people. And then I was really serious about getting a coder on. I tried to hire this one coder. I remember he looked at me and he was like, you guys have no idea what you're doing. And that was true. But I knew that this was the right direction. We just kept going and going and going. In the end, that coder became maybe my second or third tech hire. And then we just never looked back. We ended up around 50, 60 people and just built the company from there.
Now, we kind of talked about this when we spoke in person, but the types of people that you would work with on a high frequency trading operation like you run today, those individuals, and I'm not taking anything away from the types of individuals that would have been on the floor in Chicago in the early 1990s versus the folks that you work with today, but they are different types of individuals, aren't they?
Yeah. I mean, the majority of Grasshopper now are technologists, but I was trying to think about how you would run a team. Ultimately, that's how I actually consider it. You can have many different players, many different personalities on the team, but you have to have an undercurrent of ethos that goes through the team. When I started Grasshopper, it became important to me, especially like right around this stage, right, 2007, 2008, when we're starting to build up people. It became very clear to me I wanted to introduce a culture into that. And I introduced a trading culture into that. Low ego, selfless, humble, yet able to make a decision, yet able to have an opinion, yet able to get off the fence. That was the ethos that still exists in the company today. It's actually worked pretty well.
We were talking about 2006 and the time frame that you were approaching in 2006. Let's bring everybody up to 2018. And I also want to talk about a little bit about some crypto market making. But 2018, what kind of speed is Grasshopper approaching now? Where are you guys looking to find your edge? At what time frame?
Well, actually, the markets are in a super interesting stage right now. I would say that the race to zero latency has abated quite a bit, mostly because we're pushing the very edge of processing time. whether you're on microwave, FPGA, et cetera. So to give you an idea of the speed, I would say a person blinks their eyes in about 200 milliseconds, right? So maybe 1/5 or 1/4 of a second. That might have been relevant around 2006, 2007. And then it became really a few hundred microseconds. So let's say a tenth of that. And now you really want to be well under a microsecond. I think actually, if you're not in the handful or maybe 100 nanoseconds, I think you can forget about the speed game. And that's fine. If you choose to forget about the speed game, I actually think that's totally fine too. Just vacate that space because it's very mature, it's very saturated, a lot of people competing for it. I think what's interesting about the markets at this time is I think artificial intelligence and big data are starting to play a role and disrupting players that used to own big chunks of the market. The fastest of speed players might do 20, 25% of the market. So two of them might be 50, 60% of the market. Or let's say the top five, you might be pushing 60, 70%. And that is kind of the situation. If you're not sub-microsecond in the handful of nanoseconds, don't play the speed game. But big data recently has come out in the last few years. This is my guess, and I think has started to shift the dispersion, the market share of the big players, the incumbents, a lot. That is one of the reasons that I started thinking about disruption. And disruption is one of the major reasons that I ended up looking at crypto amongst many other facets of technological disruption that are happening now. So that's how I got to crypto.
When I look at crypto, I think, well, okay, obviously there's been a meltdown in 2018. I said to myself the other day, okay, Bitcoin Cash, which I don't know exactly what it is down 96% for the year. So I say to myself, do I really have to know what it is if it's down 96%? It's not there. But I think about the idea of making a market in crypto, and I look at players back in the futures markets, I guess in the 70s and the 80s, people like Richard Sandor, Leo Melamed. I mean, these guys were helping to set forward new and novel futures contracts that had never been seen before. So I don't see anything unusual about a guy like you, an entrepreneur, saying, hey, is there room for us to be involved in market making in crypto?
Crypto to me is just a manifestation of the larger technological disruptions that are happening now. That got into crypto was a few years ago. My kids are now 18 and 14 a few years ago, take a few years off. I was wondering why they don't watch TV. I mean, I have great active kids. They're smart and cool and all these things. But I was like, how do you guys not watch TV? And they're like, I don't know. We just don't watch it. And they're like, well, what are you doing? They're like, well, we watched Instagram stories and YouTube and all this stuff. And I started to realize that what I thought was a status quo or a vector of information has actually already been completely replaced by that generation. I started to realize that the main vector that they used to educate themselves about anything that they want to know was Google, YouTube, etc. My initial reaction for many, many months was like, man, this is stupid. Go outside and play, get off that damn phone, blah, 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 like a typical, 45 plus year old person would say. It took me really about a year to realize that internet of information and people had been completely displaced. At least to a person who was 15 years old or 12 years old, et cetera. Earlier, you were talking about triggers. That was my trigger to understand, oh man, like, look, I totally get these valuations now. Now I totally get how Instagram or Snapchat or Facebook have these crazy, crazy valuations and why other platforms like Airbnb and Uber, they were actually sort of the same thing. That was my next stepping stone. It was sort of like the micro democratization, the decentralization, the spreading out of an asset, of information, of a network, and on and on and on. And I just kept going down this rabbit hole, and I realized there was kind of no end to this. It was the micro democratization of the world. All you needed to do was have an internet connection. When I start to explain crypto, I realize I lose a lot of people. I bring them back to the internet, and I talk about sort of the evolution of the internet. And the first place, of course, is the internet of information. And I tell people, well, look, do you understand how your phone works? Do you understand where you get information from your phone? I juxtapose this. My mom is in her late 80s, and she's trying to learn how to use a smartphone. So I see like how she sees it, and then I look the other way and I see how my kids see it, and I see, wow, man, this is really crazy. So the internet of information is usually where everyone can step aboard the bus and they're like, yeah, I get it. All right, I'm on my phone 500 times a day, blah, blah, blah. I ask Siri, I ask Google, or I search it, whatever it is. Then the next internet is the internet of people. And you start to explain to them, look, an older person might think, Facebook is just for connecting friends or your college buddies or whatever it is. And that's true, but people also have to extract all the value they get out of it using groups, selling stuff, finding other people that are interested in what they're interested in, blah, 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 getting travel tips from someone. That's sort of the internet of people. The next internet is the internet of things. And AI is a tide that's sort of floating all of these internets, right? Well, the internet of things is autonomous driving cars. It's big data and predictive anything, blah, 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 blah. Build a house. It knows when you're coming home. It tells you if there's a fire. You can extrapolate that to medical systems, on and on and on. And then the last internet that I think is the most immature but developing very rapidly is the internet of value. And that's where you get things like blockchain. That's where you get cryptocurrencies. So you can see how the world, when you realize that all of these quadrants of, quote, the internet are sort of being buoyed along by technology, processing power, memory, new technology like blockchain, then you realize, oh shit, this is actually the same thing. This is why I feel that the world is compressing and changing so fast, is because we're on a raft of technology that's just pushing incessantly forward. This is not something to bet against. This is definitely not a trend to bet against.
To jump in there really quick, in terms of, at least current dollars, and the betting game for 2018 has not been kind to the crypto world.
When I'm talking about this, my hat is askew. It's much more like an investor. So this is a skill of the later part of my trading career. I wasn't only obsessed with making it tick and walking out with a positive P&L or, doing 100 transactions in a second or anything like that. It actually became how to trade, find edge, find value, mitigate risk in building a company or finding an opportunity or investing. So I extrapolated all of the basic foundational thought of trading in my earlier years into stuff like this. That's one reason that I think that, cryptocurrencies, I don't know which one is going to make it, but it is not a trend that I want to bet against. So I don't have a huge balance sheet of the company in cryptocurrencies, but I'm staying abreast with it. I'm learning how the infrastructure is growing, and I'm going to be a part of this, and I'm going to be close to this dragon so that when it wakes again, I will know what to do and I will be ready. So that's how I look at that investment. But there's many different kinds of trends that a person can ride in the world. And I think that just having a healthy discipline and process is so manifest in success.
I think back to one of the things we talked about at the very beginning of this conversation. Ultimately, it's about listening to the market. You've got to be paying attention. You've got to, I'm looking out right now at a skyline that's infinite. It looks like Tokyo. It's just infinitely building everywhere, construction everywhere. You have to see that, and then you have to kind of know that that's happening. If you don't look at the landscape, if you can't see on the horizon, how does one make decisions? So I think that kind of correlates to what you're saying with crypto is like, hey, yeah, crypto's it's been smashed in the face over 2018, but there's something here. You can't predict how it's going to unfold. I can't predict how it's going to unfold, but there's something there.
Yep. So I'll give you another little stat that I read somewhere, which was, I think the average person spends 3 or 4 hours on their phone a day and has, I think, about 450 interactions with their phone in a day. Okay, that seems like a lot. That is projected to go to 4,000 to 5,000 by 2025.
Per day?
Per day.
Oh, man.
Let's not condemn this for a second.
We better all keep exercising because in between our exercising, we're going to be on the phone.
I would fundamentally ask, why can't you exercise? Because currently in 2018, to use my phone, I have to take my hands out, stop lifting weights or stop running, pause enough that I can type in whatever I want. Well, that paradigm will have to change. If we're going to end up being more interfaced into technology 4,000, 5,000 times a day, then those interactions will have to be much more seamless. We'll have to have glasses or an implanted chip, or somehow it's going to communicate with, our ears or brain or whatever, some sense. That has got to happen.
The funny thing that you say there, though, is that when you say that has to happen, I'm sure some people are thinking right now, oh my gosh, this guy John, now Mike's going along with it. They want to implant chips. I will never implant a chip. Hey, guess what? If the guy next door implants a chip and starts to kick your ass, you're going to implant a chip. It's like we don't really have a choice.
That brings about a dilemma, which is how do you move along this technological curve, yet have some level of trust, privacy, etc. And again, that brings me back to the beauty of cryptocurrencies.
Philosophically, it makes so much sense.
And now that's a risk in itself. So one of the reasons that I have, look, the whole time we've had Grasshopper, literally up until last year, we've never had a client. We've never taken in outside money. Very few people have ever known about us. But I'm actually super excited about the future. I don't purport to think that I know exactly what the future is going to bring, but I see this undeniable flow of technology. That's actually got me super excited. Now, look, I totally get it. I mean, there are Luddites out there. There are people who, read 1984. They don't want Big Brother watching them on all these things. But that's one of the major reasons that I'm out much more public. And I'm not trying to preach any gospel. I'm not, selling a book or anything. But it's just that I think people need to understand that this is an inflection point. It could be an amazing inflection point, or you know what? It might just fizzle out. And
I don't think you believe the fizzle part at all.
What I believe is that I'm going to contribute. That is honestly what I believe. I hope I can make a difference, but I'm going to contribute.
Let me ask you one more question. I've already kept you longer than I said I would. Just kind of a technology question. Since you are a guy, as people are listening, you've probably said several things about the high frequency world where people are having to go to Google to find out what the hell you're talking about. I mean, people start to hear latency and whatnot. They're probably thinking, oh my gosh, I don't know where John's going on that. Okay, so here's the technology question I have for you. I've been thinking about this for a while. How far away are we? When do you think the rollout will be? And this is really hypothetical, speculative. Where are we in terms of the rollout? Mike, the guy you're talking to, is walking down the street, right? I'm walking down the street. I see the most gorgeous woman. I'm like, oh my gosh, she's just beautiful. I would love to meet her. I take a picture of her face when she's hopefully not looking so she doesn't think I'm a weirdo, right? So I take a picture of her face. How far away are we to where that same girl could take a picture of my face, hopefully, and then instantly look at their device in their hand and say, oh my gosh, that is Susan whatever. Oh my gosh, that is Mike Covel. The recognition where you talk about the privacy, it's going to go away. So what I just described, how far into the future is that? It can't be very far, can it, John?
I've got to think it's less than 5 years. I mean, China is already having society points for how you behave. And I think that their AI in terms of individual recognition, whether it's face or clothing or how you walk, is very, very advanced. So it's here. It's just not accessible by Mike walking down the street. However, why should it not be? Now, if you keep it in the hands of a government, let's hope that they're benign, but then things can always go out of hand. Let's say that technology exists. How long until it's open source? It's probably a few years until after the governments have it. And then how are you going to stop it? People can opt in or opt out. That's great. Like I said before, there is a fundamental dilemma on how you allow people to connect onto this internet of people, yet protect them. The scenario that I envision is there's this beautiful girl walking down the street. You're walking past her. Maybe by Bluetooth or some kind of proximity, suddenly you see, whoa, look, she's single. She likes to kite surf. She's in town for a short while, blah, blah, or lives here. You find some fundamental information. Maybe you don't know her identity, but maybe you can at least interface in a way that's like, hey, look, you know what? We have similar interests, similar passions. We might get along in this way. That's quite possible.
I'm glad you cleaned me up so I didn't look like a complete pervert of some sort.
I actually think this is an amazing problem that could be solved. I mean, if you really, really look around today, the big problem today is that people are actually quite desperate and lonely. We have so many people and so many ways of being entertained, but how many of these people are actually in the community? Now, look, I'm not a huge tree hugger, or I don't have these grand illusions of utopian societies, etc. But I think that would be really cool to move the needle on stuff like this. And we couldn't do it before. I remember how I thought when I was in high school and college, and it was almost like, despite best intentions of doing some good in the world or creating some positive change, we never actually felt like we could do it. Now, if I look at people who are in their 20s now, look at their attitude. It's so different. Now, they could be, naive, and maybe they won't do it, but I like their attitude. The big thing that's changed for these people is that technology is now on their side. There's scalability. There's a level of robustness that we just didn't have in the 80s and 90s.
I got to tell you, what I really love about it too is some of the issues that we're talking about with technology as we wind down is I love the transparency, because I think ultimately all of this technology is going to afford transparency in a way where those people that look at it and say, oh, if I work really hard, I'm rewarded. Oh, if I do the right thing, I'm rewarded. And bad actors are not going to be rewarded. I mean, look, there's going to be bad actors, but I think they're going to be eliminated to some degree, or at least more so than today. And you're really going to be forced, I think, by all this technology, for good or bad, to kind of behave.
And I hope that we can get that done in a way that's not totalitarian, in a way that's not too heavy-handed. Right there, that's the paradigm that we should all be focusing on. We shouldn't be arguing against whether technology is going to happen or not. It should be like, what is life 3.0 or whatever it is, however you want to say it. What's the next iteration? The other thing I do is I just look around at the world, and a lot of the structures just seem so outdated to me. Does anyone really think we're going to be able to tax Mother Nature more, take more fish out of the sea, pollute more carbon into the air, whatever it is? We're definitely close to a irreversible breaking point, if not already past. Our time is ticking.
I like to think, with all the smart people on this planet, some technology, that some of these things that we see on the news, like the plastic island in the Pacific Ocean, hopefully that someone will figure out in the not too distant future how to clean that sucker up, and we can have some progress in some of these things. John, I could keep picking your mind and we could kind of go off on tangents all day long. I appreciate you taking the time today. Hey, where is the best place we can send people? Maybe there's no place, because as you said, you're really not a guy who's kind of holding yourself out too much in the public, but I really appreciate you coming on today. But is there a place you would like people to go to find out more, to possibly connect with you?
You can search for either of my companies, Grasshopper or Grasshopper Asia and Tilde Trading. You can find me on LinkedIn, John Lin, Lin. Maybe search for that in Grasshopper, or Twitter, Grastaman _ It's Grasta_man.
John, I appreciate you taking the time today.
It was my pleasure. Great honor. Thank you.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take, along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.